Hey, what's up, everybody? So today I'm going to be talking about a stock that I think is really undervalued right now because of the whole China delisting scare and all that surrounding Alibaba. But I do think the stock is really undervalued and could even hit $200 by 2025. Okay, so before I begin, just make sure you smash that like button, subscribe, comment below if you have any questions. I'm always happy to help answer any questions you might have on stocks or options or anything related to that. Okay, so the stock ticker that we're taking a look at today is, as many of you guys probably have heard of, the stock NIO. Okay, NIO. Okay, so if you had invested in Tesla, just a year or two ago, you would have made a lot of money. And that's because the electronic vehicle industry is booming, right? Everyone wants to go EV, and NIO is really the other, the one of the other big competitors out there to Tesla, because they're making cars that are electric but cheaper. Okay, so well, it's not necessarily cheaper or much cheaper, I heard, but it's definitely cheaper than the top of the line Tesla cars. So I was reading this article on Seeking Alpha. Okay, so Seeking Alpha is one of the platforms I like to go on, and just a quick summary. So NIO is one of the top premium EV manufacturers in the world. The company just produced a record-breaking delivery month. Okay, like literally, it produced the most cars it has ever produced. Yet, it's 50% lower. It's 50% about 50% off from the highs earlier in the year. Okay, so of course we know that it's been hammered recently because of China and delisting concerns. And really, NIO is trading right now at about 5 times forward sales estimates. Okay, so that is really, really cheap compared to all of its competitors. Okay, so NIO is likely to exceed growth expectations. There's just a lot of prospects for NIO. Okay, right now NIO is trading at $34.88, but I really think it's going to have the potential to reach $200, especially by 2025. Okay, taking a quick look at let's take a look at some of the revenues numbers. Okay, so if we look at revenue numbers of NIO, we can see that it's grown substantially just in the past year alone. So they're definitely making a lot more money. The company will deliver just a little shy of 100,000 cars this year. Okay, so that's not an insane amount, but it's gearing up for a lot more production. And I think that's really important to know because by 2022, they're hoping to produce about 300,000 cars on a double shift. Okay, so that is 3 times the number of cars than what it's producing this year. And by the end of 2022, it said that NIO can produce up to 600,000 vehicles per year. Okay, so that's really, really amazing and impressive to go from 100,000 to 600,000 in 1 year. Okay, so taking a quick look at some of NIO's revenue projections, so 2021 we're estimating a couple $1 billion. By 2022, we're reaching about $8 billion. By 2023, it's believed that it's expected that NIO is going to make about $10 billion. Okay, so by 2025, it's expected that NIO is going to make about $16 billion. Okay, so this is essentially what the NIO's revenues are going to look like. In the year 2021, they're probably going to produce about 90,000 vehicles, a revenue of $5.8 billion. 2022, about 154,000 vehicles, about $9.9 billion, so about double that amount. In 2023, pretty healthy growth, about 5.5 billion is expected, produce about 250,000 cars. And by 2025, they're expected to produce 550,000 cars with a revenue of almost $32 billion. Okay, so that is more than, like 5 times the amount of revenue than what it's making today. Okay, so if you're making 5 times the number of revenue, then that means, of course, the stock is going to shoot up. Okay, so there are risks inevitably with NIO. One of the biggest risks is the whole China debacle. Delisting. Just pressure with all that surrounding around China. But I personally think yes, there is that risk, but the reward is pretty high, especially given that EV vehicles are such a big thing today. And so even if you take a look at the financials, everything makes sense to buy this stock today. They're making literally twice the amount of revenue this year, and they're producing so many cars, almost 100,000 cars in so little time. Taking a look at the FinViz, we can kind of see what other people are doing. RSI is at 39.36, so that means it is slightly oversold. That means it's a great time to buy right now. So I just think this is definitely a stock that I'm bullish on, that I am adding at least a few percentages to my portfolio. Right now I have probably around 1.5%, so I'm hoping to probably bump it up to 2%. I'm going to show you how you can trade NIO. So there's a couple different ways you can trade NIO. Honestly, I wouldn't worry about put credit spreads or any spreads like that. It's just really just too hard to predict NIO and how much it would go and where it would go. I would definitely have just a long-term thesis on this. So this is one of those stocks where you will definitely want to keep for at least 1, 2, or probably 3 years. Okay, so definitely a long-term horizon. Okay, so with that in mind, a couple of things you can do is you can start by selling puts. So you're essentially getting a discount on the stock. If you sell a put of the expiration of December 17th, that means by December 17th, if the stock doesn't fall below $33, you get paid $75 of premium. Okay, if it does go below 33, then you're assigned the stock. You have to buy 100 shares at $33, but you keep the premium. Okay, so you can kind of play around with that. If you go out a little further more, your premium increases. And so that's just a great way to get exposure on NIO. And of course, if you want to just outright buy shares, that's totally fine as well. But I would probably just start by selling puts, especially if you're okay with buying 100 shares, right? You're getting paid a premium and you get a discount on the stock. The other way you can trade NIO is if you don't want to use up as much of your cash, and but you do believe it's going to go up a little bit, which I do think it's going to go up, then you can go ahead and buy a leap option, which is basically just buying a call option with an expiration date of a year or more out. So I would set my expiration date to January 2023, buy a call option in the money, and the money just means that it's below the current share price. And that means the stock would only have to move a little bit for you to make a profit. And so, like, for example, you can buy a leap option at $20. I usually do look at the delta. Delta just tells you the probability of that leap option making you a profit. So 86% is pretty high. And the great thing about leap options is you definitely don't have to worry as much about decay. Theta tells you the decay per day, how much you lose in value on the contract, and it's a very slow decay. So generally speaking, I think it's better to buy call options with a smaller theta. Okay, so if you were to buy a leap option at $20, you would essentially be paying $1,700 for the right to buy NIO stock at $20 sometime in between January 2023. Okay, so that's still a lot cheaper than buying 100 shares outright. Right now, if you buy 100 shares outright, it'll be $3,400. That's about half the price to buy this leap option. Okay, so I would definitely either sell puts, buy shares, or buy leap options. I probably wouldn't worry about spreads because this one's too hard to really figure out where it's going to go. Other than that, I think that's pretty much it for this video. If you like my content, if you want me to make more content like this, just make sure you smash the like button, comment below if you have any questions, and subscribe for more videos similar to this. Until that next time, guys, happy investing, invest safe, and I'll see you guys in the next video.